Right, so just want to lay out exactly what's going on here. No brand deals, no commission structure sitting in the background, nothing like that influencing what gets said. That's just not how this works. What this actually is about 9 years of genuinely compulsive infrastructure testing. It started back when most of the space was still figuring out what it wanted to be. And the last couple years specifically, they've gone almost completely toward AI trading systems, not surface level stuff, like actually grinding through, intentionally creating rough conditions, bad timing, thin markets, forcing edge cases that normal reviews never touch. Got taken by a few scam projects along the way, lost real capital, which honestly just sharpened the whole process. So today is more of a review, a system I've been running tests on for quite a while now, one that's actually held up as legitimate through all of that, and then some breakdown of methodology that took way too long to piece together when first starting out. Okay, so the platform is on screen, and rather than just clicking through randomly, I'm going to narrate each move as it happens, because the setup actually makes a lot more sense when the reasoning behind each step is clear. So starting with authentication, pressing connect here, pop-ups coming up, selecting MetaMask. Okay, that's through. So, first real configuration step is preset selection, 3 tiers available: safe, optimal, aggressive. This is essentially defining the bot's execution behavior, risk parameters, return targets, and the capital threshold each mode requires. Platforms nudging toward optimal by default, which is where most sessions here have started, going with that today based on where the market's sitting. Then, neural network selection. This determines which AI model is actually running the operation. And this part's worth pausing on for a second, because each model isn't just a cosmetic difference. They're trained for different market structures. Some are built for volatile, fast-moving conditions. Others are optimized for tighter, more compressed price action. When there's no strong conviction about current market structure, auto-select just handles that decision, reads the live conditions, and routes to whatever model fits best. After that is capital amount, straightforward, just whatever makes sense for this particular session. Then network selection, and this one's actually more dynamic than it looks. The system's pulling live blockchain data and ranking available networks by current congestion levels and active fee rates. So it's not a static dropdown, it's a real-time snapshot of which chains are actually worth routing through right now. That detail matters more than people usually realize, because network fees have a direct impact on margin. So okay, I press Start AI. System's spinning up, loading the model first, then running initial market calculations, syncing with current conditions, and then the session goes live. Letting this run for a bit, and coming back once there's something to actually look at. Okay, pausing the session now. System settled, and there's a full results breakdown on screen. So running through it, total balance, net profit from the session, trade count, win rate, total runtime, clean read on everything that moved. And then there's a complete execution log, every trade the bot made, sequenced out with full detail. That's the part that genuinely separates this platform from a lot of what's been tested before, being able to actually trace the system's decision-making, not just see the final number. Like understanding where the returns came from, rather than just that they showed up. That kind of visibility is rarer than it should be. So moving to withdrawal now, picking the asset, pulling up the receiving address. Now taking an extra look at that before moving forward. That's just habit at this point. Okay, confirming. And now the protocol is processing. Usually clears in a few minutes, nothing to do but let it run.
Okay, while that's going, good moment to talk about why so much time goes into AI-based systems specifically rather than just trading manually. Because the honest answer is that manual execution in this market stopped being viable a while ago. Arbitrage opportunities are sometimes measured in 3-4 seconds. That window opens and closes before a human can even register it, let alone act. What these AI systems are actually doing is holding and processing a huge number number of real-time variables at once: liquidity across venues, gas costs, slippage estimates, spread depth, and making execution decisions in timeframes that are just structurally impossible to compete with manually. Spent a long time trying to bridge that gap with spreadsheets and alerts, and eventually just had to accept that the tooling has moved past what manual workflows can match.
So, last thing worth covering is the actual trust evaluation process, because pulling up a platform and watching one session is pretty much worthless as a signal. The first layer of the process is running every single feature the platform exposes, not skimming, actually configuring everything, testing every claim across multiple sessions. What's getting measured there is basically just whether the system behaves consistently with what it says it does. And there's genuinely an intuition that builds up after enough of this. Something designed for long-term, real users has a different feel from something built to pass a quick first look. Hard to articulate, but it becomes obvious fast.